Hello everyone, welcome to Moneycontrol's Ideas for Profit. Today we are going to discuss about the Q3 earnings review of cement companies. The company that we have in focus today is Sagar Cement, which operates in the northern region, Sagar Cements, which is a south-based company, Birla Corp, which is again a central-based cement manufacturer, and Sanghi Industries, which operates in the western part of India. Overall, it was a mixed set of earnings for the most companies as the top line was driven largely by volumes in the quarter gone by. Majority of the companies in the sector had a volume growth of around high single digits, which was the key driver for the top line in the quarter 3 earnings. Talking about the key highlights from the results, it was a broad-based volume growth across most parts of India. Sanghi Industries had a volume contraction primarily due to a plant shutdown. In contrast, Birla Corp as well as JK Lakshmi Cement have witnessed a volume growth of high single digits. Sagar Cements was again an exception given a favorable base and witnessed a volume growth in excess of 30%. Well, in terms of the realization continued to remain muted across the regions. Well, the companies in the central region witnessed a capacity utilization higher in excess of 75%, and that was the primary reason the realization continued to trend higher by 4 to 5% on a year-on-year basis. Well, in terms of the cost pressures have started to come down, and therefore the margins on a sequential basis continued to improve. The Q3 margins of most companies were better in comparison to Q2 margins. The primary reasons being the fall in the oil prices as well as the coal as well as other commodities such as petcoke and lignite have started to trend downwards, and there had a positive impact on the margins of these companies. Talking about the sector outlook, well, the sector has been witnessing a volume growth of around 7 to 8% over the past 12 to 18 months. This has been primarily aided by large-scale infrastructure projects. However, that being said across, there exists a risk in the near term given the uncertainty of the upcoming elections. Well, in terms of the prices as well as the capacity utilization, the same is expected to remain muted in near term but is expected to inch up higher going forward. Well, the capacity utilization is at sub 60% in the southern region, while in contrast, the central region is around 75%. Therefore, the prices in the central region are much higher in comparison to the southern region. So, that really bodes well for the companies in the central region. However, if you have a long-term perspective, southern regions have a higher delta of expectations in terms of the earnings visibility. Well, in terms of the cost, the commodity prices have started to trend downwards. Well, therefore, there exists a possibility of a margin expansion going forward in the coming months. In terms of the stocks that we definitely like Sagar Cements at this point of time, as the company has displayed a volume growth in excess of 20% in the first 9 months of this calendar year. The company is further expanding its presence to newer geographies such as Orissa as well as MP, which further diversifies its revenue mix. Well, in terms of the cost, they are setting up new power plants as well as solar power plants as well as the hydropower plant, which would really aid the cost structure of the company. This cement company should be kept an eye on, as this could turn out to be a dark horse in the cement space. Well, that's it about the Q3 earnings review of cement companies. For more views and updates, do log on to moneycontrol.com.